is Jamie Strauss. I'm the CEO of Digbee, a data and research platform for the mining industry. Research is uniquely focused on the key risk disciplines of geology, metallurgy, and engineering. And we're going to be launching a ESG reporting platform for the junior mining industry later this year. Today we have with us a outstanding panel of ESG either experts or people leading in the field of reporting in ESG. Justine Fisher from St. Barbara, Annie Markova from Silvercrest, Golden Star, and previously in the investment management world, Sharon Flynn from Oceana, John Welborn from Resolute, and Matt Fifield from Pacific Road. Most people down in Australia, Annie in Canada. So good morning all, or good day all, and I'd like to start off this panel just kind of with a bit of a general question. ESG reporting has made a rapid entrance to a lot of people in the world in the last 12 months. Do you see, as we see it today, this as an opportunity for the mining industry or potentially a pitfall? And also why? John, maybe you'd like to, you've just had your interim results, so no doubt this is fresh to your mind.
Well, at Resolute, we obviously see it as an opportunity, but the obvious answer is it's both, as it should be. You know, increasingly there's an ongoing developing dialogue and focus on ESG or the broader field of sustainability across the industry, which is a good thing. And I think the challenge for producers is there's obviously multiple frameworks, and effectively what ESG reporting allows you to do is stack yourself up against leading practice and open up your operations for greater insight and transparency, with a view that you set ambitious targets and hold yourself accountable. So that's the opportunity. And certainly as an African-focused miner, and Resolute's been operating in Africa for more than 20 years, it's always been a key pillar of our activity. But part of our focus on moving the capital base of the company to the UK and listing on the London Stock Exchange last year has required us to fundamentally reconsider our approach to sustainability. And that has definitely, to pick up your question, been seen through the lens of an opportunity. We see it as an opportunity to attract new investors, an opportunity to benchmark ourselves against our peers and outperform. And undeniably, though, linking it back to operating performance and shareholder returns, as an African miner operating in emerging markets, a focus on sustainability is actually fundamental to our license to do business and therefore ultimately our profitability and success. So our focus on sustainability is certainly, we view the lens of opportunity. That challenge around multiple reporting frameworks or different expectations across the industry, I think we've tried to solve by aligning our approach with global reporting initiatives, and Resolute is a member of the World Gold Council and participated in the development of the responsible gold mining principles, which along with the other accepted standards like the Task Force on Climate-Related Financial Disclosures, has allowed us in that fundamental reassessment of our approach to this area to use those frameworks to develop a lens that it is an opportunity. I look back even at presentations I did 3 or 4 years ago for Resolute, and the then catchword wasn't ESG, it was CSR, capturing similar concepts. And I look at my and all of our peers' presentations, and it reminds me of being in the UK a few years ago, Jamie, and there was an advertisement for a anaesthetist for a Devon-based hospital in Barnstable. And in the advertisement that rang in the paper, it ran through what they were looking for and the sort of requirements of the role. And then down the bottom of the printed ad in the paper, it said, "And the usual crap about equal opportunity." So obviously someone writing the typeset of the ad had expected the typesetter to put in their statement on equal opportunity as an employer. And unfortunately, it had made the press without that. And I think previously, a lot of our presentations had a slide on CSR or a photograph of handing out some school books. The great thing about the opportunity of ESG reporting is it's a lot broader than lip service for presentations. And coming back to those frameworks, that accountability and the opportunity of ESG reporting and benchmarking hopefully will lead to real progress on the measurable outcomes of sustainability.
Okay, thank you very much indeed. And maybe just taking John up on that, Sharon at Oceana. John obviously talks about a license to do business. I think everybody kind of supports that. We've been doing ESG for many years. Do Oceana see this as an opportunity of communication in the industry, or perhaps just give us a little bit of insight as to how Oceana has taken this forward in the last 12 months or so as it's evolved?
Yeah, thanks. Well, Oceana has been committed to the principles that underlie the concept of ESG for a while. The ESG focus has really helped us to be more precise, to think deeply and internally about what we need to change and what we need to improve in order to meet the benchmarking goals and guidelines. We certainly also think that mining as an industry is pretty uniquely situated to be able to take on the ESG challenge. Mining is a controversial industry. We've had to learn how to respond to lots of significant expectations from society in the past. And I think that we can certainly take this on and do well, particularly with regards to climate change. We're finding huge enthusiasm across the engineers in our company to really wrestle with the technical challenges and the step change that putting in our goal to align with net zero by 2050 is going to require us to do. So certainly we've seen it as also, similarly, as John said, as a great opportunity. There certainly are challenges because particularly with ratings agencies, it can become quite confusing. It does appear that at times there's a bit of bias that makes methodologies obtuse. When you talk about ESG, it covers a huge range of issues from climate change to human rights to safety to environmental management. And each of those areas, we hire professionals, deeply experienced professionals to manage. But when it comes to actually doing the ratings, it's one or two folks within a rating agencies that may not have that deep experience to understand the nuances. So we try to work, reach out, talk and engage, and then keep track, adjust our own policies and systems and approaches to be able to respond with the data that the different agencies actually ask for. But I think that the implementation of ESG, particularly from a ratings perspective, I think is still there's still a lot of room for improvement, but I think that it will move to a more consolidated structure. We're also members of World Gold Council. So standards like the GRI or the Responsible Gold Mining Principles are really important because they aren't driven by profit. There's not a company behind that seeking a profit motive to implement those, i.e. the World Gold Council. So GRI also is a multi-stakeholder initiative. So I think it's important too for the ESG industry as such to really take a look at what GRI has done and what different groups have done so that industry has successfully adopted those indicator structures. So I think there's still a lot of room for development in the ESG sector.
I don't think anybody would disagree. We're at an early stage of this of evolution. So Justine, do you want to just comment a little bit from Zimbabwe's point of view?
Certainly, thanks. And it's great to hear from Sharon and John. I think we're all going to echo each other in our thinking around seeing this as an opportunity. And in terms of the opportunity, if we take it back to why we are reporting around ESG, of course, there's the requirements that we're talking through. But if we go back to the principles of our industry and what we want to achieve and to have a sustainable future, it is about doing the right thing. So we see reporting as an outcome. It's not the driver. The driver, of course, is all of our collective activities. And Sharon made a very good point that it's become such a big basket now of, well, what falls into ESG. So by way of example, at St. Barbara, many people don't know that we hold the WEGA citation for employer of choice in respect to gender diversity. We've held it for 6 years, and we're the only mining company in Australia to hold it. And we'd love to see more mining companies embark down that path, because as Sharon and John have just pointed out, there are a lot of different ways that we can measure our different achievements in these areas. And here in Australia, the WEGA standard around diversity, and then the diversity of thought and background, then you bring that into your entire organisation. And whether it's around focusing on being carbon neutral by 2050, which we have made a commitment to likewise, and how we can appeal to the different people across our business to actually incorporate ESG into the way we do business every single day, so that it's not just the outcome and the reporting, but it's how we go about our business. So I think that's a very important point in social license to operate. So it is seen as genuine, and that it's not seen necessarily around only the metrics and the data.
Excellent, thanks very much. And that's a good segue into Annie, maybe who could just give a bit of a Canadian angle to it as well, and maybe how it's slightly different over there, but also you've come from a investment banking background as well. And Matt, I'm not going to ignoring you, because I want you to kind of put a different angle on all of this as to how you can look at this from an investor's point of view, and how perhaps it's changing, and maybe the difference between what people are reporting from a producer's point of view relative to investors. But maybe Annie first, you could just come in on that.
Yes, thank you so much for the opportunity. I'm actually would like to frame it a little bit differently. So the conversation of the ESG disclosures has been going on since 2006, and now more than $100 trillion of capital has signed on to the UNPRI, and investors, and not more importantly, the asset owners, would like the implementation of more defined and stricter scrutiny behind the investments that are made in their name, in order to make sure that we have sustainable businesses. And what does that mean? That means, very simplistically, that our businesses need to deliver returns in excess of the cost of capital. And when I put it in that context, then the cost of capital is what gets impacted by so many different risks and factors. And we have to think about what are the most important ones that will prevent us from delivering on our promises for returns and profitability, and how can we align the interests of all stakeholders to achieve those goals. We don't operate in a vacuum. We operate in our socioeconomic environments. Every jurisdiction has its own challenges, but overall, we can agree that society right now is fighting with climate change, that the climate change patterns are real. We cannot just pick up our deposits and move them to more favorable clients. We have to deal with those situations. We have to properly understand what it is. We have to understand what is it that we can do when we have too much water or not enough water for our processes. We have to understand not what our impact is on the carbon emissions, but what the carbon emissions and potential taxation would do to our businesses. Same for our social aspects. I mean, this is an area that the mining industry has done so well over the years, the license to operate. We understand that very well. I think the failure has been of our inability to communicate the positive impact that we have had on the communities, and the second and third derivative of our presence in areas where we operate. Sometimes we have to be delivering functions that governments would do, such as facilitate healthcare, assist with clean water, train people how to run small-scale businesses, divert them away from polluting rivers with mercury, cutting trees in deforestation efforts. So we have a lot of positive impacts. I think we have not connected the dots for investors. Can we quantify that? And I think this is the exact benefit that right now, as an industry, we have an opportunity to communicate, especially in this COVID environment where we employ a lot of people. I mean, we are responsible for the health and well-being, not only about our employees, but of communities, and how we assist the governments that we work with. And this correlation is misunderstood, and I think we need to tell our stories well. And at the end of the day, investors want returns. but they don't want them at the expense of the environment or the people we employ and work with. So how do we do this? And this is why ESG frameworks are focused on the most material aspects that impact the businesses. There's a lot of information that companies provide, and this is great because it's used by various users. It could be NGOs and governments and regulatory agencies. But at the end of the day, what we want to do and portray is how are we managing our business in a most ethical way, in a way that we can deliver on our promises. And to do that, you have to be able to attract the best talent and skills, starting from the board of directors, to be able to understand and comprehend and work with the strategies and integrate this purpose-led strategy now in the new context of stakeholder capitalism, and design your strategies around the cultural values. What do you believe in? Only this way you can align your employees towards some sustainable goals that they believe in and they would like to make a difference towards. And together you can execute on the strategy. So to me, the frameworks can be used and should be used very much integrated within the DNA of the organizations, and they're tied to the risk management systems, they're tied to the board supervision, they're tied to the decision-making process in every step of the way. So from that point of view, there's no too little or too big company. We all have responsibilities because governance is what ties all that together. It's all about believing in the way that you operate and you're doing the right thing, and being able to show and tell the story with your data, with the story, with the actions you take, and making profits and delivering on promises that are non-financially driven. So that's the key.
Well, thank you for that. And Matt, Pacific Road have made a point of bringing ESG to the fore. And I know that you try and make an effort to try and help some of the junior companies, perhaps not necessarily with some of the producers who have the resources here. Maybe you could just kind of expand a little bit on this and how Pacific Road helps, or the private equity industry in general can help bring some of these to be a positive for the industry, and how you can assist them.
Sure. Thanks, Jamie. And first of all, thank you, Andrew and Minds and Money, for the opportunity for all of us to get together. The conversation that we're having today, Jamie, and the one that you're facilitating, has got to be one of the most important ones that's going on today. If you step back, I'm going to rephrase your question a little bit, Jamie. So Pacific Road, we're an institutional investor on behalf of pension funds and high net worths and endowments around the world. We're specialists within mining. We have former operators on our staff. So we are probably, unlike a generalist investor, able to engage with management teams of companies large and small and understand the pressures that they go through and the opportunities that they have. And if you step back for a second, what we're actually engaged in here, why do you have ESG reporting? No one needs to invest in mining, right? As an investor, there are so many ways in the world to turn $1 into $2. And so part of what we are doing, of course, as industry participants, we look at the fundamental value creation and the jobs and the livelihoods and the inputs into the economy, and we think actually you really do need to invest in mining. But fundamentally, most investors don't need to go into this sector, and they're not specialists like Pacific Road. They don't understand what John deals with on a daily basis or what Justine is up against when she's talking to her stakeholders in her government or the well-being of her workforce. And it's technical and it's hard and it's difficult for people to comprehend. And so what I think ESG represents as an opportunity is actually a chance to communicate with broader investors and say, here are our material risks and how we manage them. This is how we have chosen to run our company. And by the way, you can benchmark that, like John was saying, against other people, and you can pick and choose. But what I want to communicate to you is, in fact, that we have acknowledged that we have material risks, that we have obligations as participants in society, and that we are managing those risks and going towards an outcome. And that communication process, Jamie, is probably the most important thing that's going to come out of whether it's consolidated ESG reporting or just taking somebody and starting them on a journey. And that's what we do, whether it's at the junior end or the middle end of the market, is we're encouraging people to begin on that journey of starting to self-report. When you report, you don't get it perfect the first time. What you do is you start to really engage with the, with the content of, okay, how am I managing corruption risk, or how am I managing water, or how am I managing my obligations to Indigenous people or stakeholders, or whatever it might be. And that process of disclosure actually becomes very contemplative within the boardroom and within the executive team. What do we stand for and where are we going? What you find is that actually strengthens companies, and it makes you clearer on what you think you need to be doing. And it does increase company performance, and it certainly highlights the material risk management. But ultimately, I believe that the ESG disclosure it needs to be integrated within the whole company. Disclosure without integration, and it doesn't make any sense. That's something that we as specialists look for. But the reason to do this is to open up a channel of communication with generalist investors that are saying, I could buy any gold company in the world. Why should I buy Resolute? And you have some things about your operations, John, that make that pretty interesting, and reasons why you might want to do that. But then you need to engage around, well, actually, and here are our material risks, and actually we're managing them very well. And that gives people the comfort and the ability to trust that the returns that you're saying are there will be there again, again, and again, or to bet your team, Sharon, to grow your business over time because of how you manage your risks and where you see opportunity. That's the conversation that is that we're all having today, and will continue as people layer on more and more. I'd like to know about this. I'd like to know about that. Eventually, it will standardize. But the nexus of the conversation is competing for capital and competing for investors' attention, because again, you can invest in anything to turn $1 into $2, and it's about creating that pull through so that your investor base is loyal, proud to be an owner of your company, and engaged with what you're going on. So the final point, Jamie, is you said, what's the role of private equity? Well, I would say specialist investors or concentrated investors, or people that engage with the likes of people here that are really getting down into the weeds. That is trying to help accelerate that conversation, and not only accelerate that conversation by saying, I think it's really important that you talk to us about these things, but also sometimes by bringing tools or creating an external stimulus to move the industry in that direction. So that engagement by investors like ourselves, our colleagues in the private capital world, or some of the things you've seen around the tailing standard with Church of England engaging at the very high end of the market, that is the world saying, we need materials, we need them done in the best way, and you need to actually present to the world how you manage your business and how you deal with some of these risks, because we're curious and we want to know.
Yeah, that's outstanding. Thank you very much. And I'm sure a lot of you have had this experience. I was last week talking to an ESG fund in London who had never invested in mining, and they've been doing it for 16 or 17 years. They have something like $18 billion under management, and they'd never invested in a mining stock. And they've said that if you can harmoniously report and prove that the products you produce in the world are helping transition to the world to sustainability, which of course many of the products do, then there's no reason why we should not be investing in the mining industry. So to me, the opportunity for everybody is really great here. But one of the problems we obviously have, and it was reported in the Weekend FT by Fiona Reynolds of the PRI, is disclosure fatigue. And John, you actually mentioned right at the beginning multiple frameworks. I think a number of you have mentioned this. Do you see this as a hindrance to getting the benefits of this, notwithstanding the benefits clearly we're seeing on the ground as a result of change of behavior? But is this a benefit that we can, for the whole industry, get? Matt, you put your hand up, so why don't you go first, and then we'll come back to the others.
Sure, I'll be brief in this, Jamie. But I think that if you step back and put this into context, the Equator Principles were put in, so very long ago to manage against a set of demands by a particular set of stakeholders. And you've seen, again and again internally, as we mapped, we saw something like 9 relevant standards that all basically were trying to achieve some of the same things. And the answer is, from my perspective, there could be disclosure fatigue, and there are interlocking and intermatching requirements from these different, bodies, and sometimes it's a little bit confusing. Step back for a second. What's the journey that we're on? We're on a journey. So starting is important, right? Nailing it is not. Starting it is important. Starting that conversation and mapping towards it. And if somebody needs a particular piece of information, well, they're going to come. If they're interested, that's great, because that means they're interested, and they're going to come ask you, and you're going to be able to give it. So I would encourage the audience that's listening, rather than saying there's so many standards, I don't know where to start, just start and start moving in that direction. And you'll find that people will come with you on that journey, and that the expectations is that over time, you'll get it more right over time. So
Okay.
I don't see it as a hindrance. I just see it as that's where we are in the conversation. And rather than choosing that as your pièce de resistance on why I'm not going to start, blow through it, start.
Okay. Thank you very much. And we're going to keep this one brief, but Sharon, maybe straight over to you. Do you see this as a hindrance to you, or are you really focused at Oceana exactly what you want to report now and how you're going to get it out and take it as a journey, as Matt says?
Yeah, no, it's a journey. Absolutely. It's only a hindrance if internally you don't figure out how to deal with it. So we just launched last year a management system headed up by 3 key policies around government and civil society, human rights, and communities. And we built out a set of management standards that are now being applied across the company. But to do that, we pulled together the World Gold, the RGMPs, the UN Global Compact, the IFC standards. We pulled all of those benchmarks together. And if you do the analysis, as Matt said, it's pretty much all asking for the same thing. So we built our internal approach mapped out against those standards, and not necessarily through us thinking, oh, this will give us the best ratings, but rather these different external benchmarks offer us best practice, and we need to learn from them, and we need to figure out how to integrate them and adapt them into our business. So that's how we've approached it. People come at you with different asks, et cetera, but if we've understood the universe, and if we've understood where the universe of expectations is going, and that we've aligned our internal approach to it, then we're able to deal with pretty much any ask that comes across, whether it's from an investor or whether it's from a ratings agency.
Okay, Annie, I know you had your hand up. Yeah.
Just very quickly, I know globally there is a push now to consolidate some of those reporting standards. The GRI is working with SASB, for example, and there will be standardizations. Once the regulators step in, I think there will be harmonizations. I'm hoping it's going to be across continents, but there will be. It's an evolving sector that will somehow come to a single set of principles and metrics. The big 4 accounting companies are also working on standardization and harmonization of disclosures, but I also want to point out this could be very overwhelming for small and exploration companies and junior companies, because there's so many disclosures that they have to deal with, and this is where the beauty of new software platforms like the one in Canada designed by a company called Onion is helping, that they have taking those principles and they're breaking it down, making it manageable and easy for people to understand and report to it. Just have to start with and answer the questions and then see how your policies can evolve over time. So I strongly encourage you to connect with me if you're interested in more information, but there's solutions now to help in this process. It's all about having the desire, and you have to start.
Okay, Justine?
Jamie, I'd love to make a point there. I think everyone's made a very relevant arguments here. And where Matt said you've got to start somewhere, one of the things that our industry is fantastic at is sharing. If you look at how we collaborate, really, we are happy to collaborate as an industry up until pretty much sales of a product. So if you've got a problem in the mining industry, whether you're with an industry association or you've built relationships across the industry, I always know I can pick up the phone and I could call Sharon and say, what are you doing here? And we share so much with each other. And I think that's the point that we need to recognize here too. We do all look at what each other's doing, and that's helpful. And because as an industry, we're prepared to do that, I think it helped us all lift up. I actually spent quite a long time at Ernst & Young. I left the mining industry, went there for a period of time, what I found remarkable in the Big Four was how nobody shared it at all. And if you even look at COVID, one of the reasons across the world the mining industry has continued to operate is because government can depend on us to do the right thing. They know we report. They know that we are the masters of capturing data, keeping people safe and keeping our communities safe. So we do have some good runs on the board, and I would, in over and above of tools and systems and processes, I think the benefits of our collective sharing as an industry is something we should call out and keep doing, whether it's Canada, Australia, or wherever, because we can learn so much from each other as we go down this path.
Thank you for that. And actually, I'd quite like to come on to sharing initiatives in a second, because I think that was one thing that came out of talking to a number of you. But John, can I just come back to you on this question initially, but to slightly verse it in a slightly different way, because you've just done your interim something. What do you think investors want to see in an ESG report, whether it's on an annualized basis or over time or whatever? How do you think that is? And maybe is there a gap between what the investors want to see and maybe what you're reporting, or not you necessarily you, but the industry is reporting, or even possibly what the regulators are hoping for as well?
Well, I think there's been some really good points made, Jamie, around what investors are looking for, particularly from Matt earlier. And I think that's decision making. And it actually links back to this discussion about, is there a risk of disclosure fatigue? I think there's a huge risk of disclosure fatigue if companies are looking at their sustainability report as an investor relations tool, and particularly smaller companies who look, as we're talking about with benchmarking, and expect that they're going to be able to produce the sort of sustainability outcomes and glossy brochures and report on all sorts of metrics without having done the work. Mm-hmm. Because the disclosure really is only possible if you've done the work. And so the disclosure fatigue is coming from the wrong end, thinking about what is our sustainability report going to look like. And I don't think, to come to your specific question, that's what investors actually want. So that's important. I think that all of us have spoken about the sustainability or ESG pathway being a journey. And it's one that we're never going to achieve, our ambitions, because we will reset them, whether that's net zero emissions or nationalisation of our workforce in a Resolute sense, or our safety statistics. The reality is it's always going to be an ambitious journey and I think what investors want to see is, how is the structure of that journey going to be measured? And ultimately, as Matt described really accurately, what is the decision-making process within this particular company? And Annie spoke about the same things. How does this company run its business? How does it decide what it's going to do? I mean, at Resolute, we have a very simple mission statement, and it's 4 words. It's mine gold, create value. It's what we do. People at Mines and Money conferences may have heard of the joke I tell about how we developed that mission with long statements and wordsmithing around these huge long statements. And, recalled a company in Australia who bought an abattoir. They were Chinese, and their mission statement was kill pigs, sell meat. And so we've copied them in what is a very simple captured statement. But there's a lot in that, because obviously earlier it was discussed about investors looking for returns and $1 going to $2. I actually think it's far more sophisticated than that, and as we're all describing. And so create value can be in all sorts of ways. It's an environmental legacy, it's a community outcome, and obviously it's measured in profitability and share price returns, most obviously. But I think investors in that disclosure are looking for an indication of how do we have complex decisions in the mining industry. Here in Australia, the obvious recent example is Rio Tinto's issues in relation to destroying thousands of year-old Aboriginal caves and the damage that's done to their business. It's certainly, hugely damaging, not just to them as a company, but also the whole industry. And there'll be hopefully some good things that come out of that for the entire industry. But you're seeing some real damage. So investors don't want to see that sort of activity. They want to see responsible mining practices. And in the disclosure, they want to see not just the outcomes and the TRIFRs or the numbers, But I think what they're looking for and what we're trying to promote is the underlying basis of decision. How do we manage these issues? And that needs to link up from the disclosure. And it's been actually, it's re-enthused me listening to even my peers on this panel around how uplifting that can be for the whole company, and that link with investors who ultimately, if you're in a listed company or a private company, you're working for your investors, you're working on their basis, and having a link with what their ambitions are and understanding, and them understanding the basis of decision, I think is a very aligning issue. And obviously, as a chartered accountant, historically that's been done by publishing numbers and having auditors sign off on accounts. And I think increasingly that's almost irrelevant, unfortunately, for my former profession. And I'm quite enthused by the fact that sustainability reporting is going to become a more important way of an investor looking at how does this company do business, what are their ambitions, how do they make decisions, and how do I judge them as part of looking at an investment return.
Okay, Matt, did you have a point you just wanted to make? I've got a follow-on question with John in a second.
Yeah, look, it's a very small point. It builds off of some of the things that other people said. John, I think you say it so well around the basis of decision. When investors are looking at your ESG disclosure, part of it is about judging material risk and material risk management. When somebody, has no information on how they're managing their risks, people tend to assume the worst, and given the choice to do whatever I want to do with my money, I'll stay away. The other aspect, though, to the positive is when you're talking about your decision-making basis, people are looking at this disclosure, trying to get to the essence of how you do business, and ultimately that's a reflection of the leadership. And when you think about, I think it was Annie or Sharon mentioned just how important the connectedness in terms of mission and purpose of what you're doing is with being able to attract and retain the very best people and maintain healthy relationships with your communities and all of the different stakeholder groups. That ultimately is a reflection of leadership in the company that you're building. So for investors that may buy and sell your stock, or for investors that are going to own a piece of your company for a very, very long time, the large BlackRocks of the world and the rest, what you'll find is that engagement around what kind of a company are you building, and how does that leadership, that this becomes a proxy for leadership in some ways, because it's a vision of how you do business. And that's very important, not just the risk management, but also the positive attributes. So I commend you for being able to see that, John.
Okay, so I want to come on in a second to the juniors, because the juniors carry such a weight of responsibility as well, not only from an M&A point of view where you need to have an audit trail to go through, but also we need to get this right from the beginning and need to start at this journey, as all of you have said. But if I could just come back to Justine's point on sharing, and maybe John, if I could just start off with you. You've got an automated mine in Mali. Have you got anything that maybe, and Mark Bristow was highlighting this on his panel yesterday, actually, the benefits of automated mines and what it can do and how it can improve so many things. Don't look at it from a negative of taking employment away. Is there anything that you feel as though you can share from that knowledge and that experience where that can then start to lead out and help on an ESG factor going forward, whether it be health, safety, training? Clearly there are some financial benefits as well, but maybe from the ESG angle.
Well, absolutely. Technology is an obvious vector for the mining industry to be more sustainable and to achieve better environmental and safety and social outcomes. The frame of this question I would challenge a little bit, Jamie, because people often see the automation project that we're running in an underground mine in the south of Mali as a threat to our efforts to nationalise the workforce. And this isn't a garment factory with 300 sewing machine operators that we're retiring in order to plonk a big machine in the middle of the yard and produce the jerseys quicker and cheaper. This is about removing people from harm, but really, more importantly, it's about being able to take local workers and train them to use very high-tech equipment very quickly. We've all seen that with mobile phones. I remember when the first VCR machine came out 30 years ago, trying to train my mother to use it and record my favourite show while I was out at university socials. I'd always get home and it was the wrong recording, and the instruction booklet was a small phone book. My mum's now in her 80s, 30 years later, and very happy to get a new iPhone without an instruction book and use it within 2 minutes. That's not because she's got better at adapting to technology. It's because the technology has got so much easier to use. So at Marley, we're no longer needing to take a 10-year experienced bogger driver out of the goldfields of Western Australia and fly him business class around the world on a 4 and 2 week roster. And I'm really pleased that COVID has only accelerated my own personal belief that the FIFO system doesn't work anywhere, and it certainly doesn't work in Africa. So I could talk on this for a long time, Joby, but I'm convinced that technology is an ESG solution, and particularly automation, in the ability in Africa, in our context, to be able to train people quickly and reduce your reliance on expats, which is a positive thing for the local community. And then, it's part of a view I have that underground mining is going electric and it's going automated. And that has very strong links to both safety and environmental outcomes, particularly underground, with a lack of emissions and removing people from harm's way. And I don't think that is a threat. I think we've shown at Syama, in fact, there's been no impact. There's only a positive impact in our numbers. Like all African miners, we always report that 90% of our workforce is local. And in the past, we've probably hidden the fact that 90% of the workforce is getting 10% or the salaries. It's not quite that bad, but almost. What automation and other technology improvements allows us to do is increase the training and ability of our staff, and ultimately provide more local salaries and higher level jobs and training to local people.
Okay, that's brilliant. And I want to go on more about this, but I've just been given a 5-minute warning. So I'm going to jump straight onto the juniors. And Sharon, I know Oceana has been an investor in juniors over its recent history and everything. And maybe you start off with, do you think the junior industry, the non-producers, are ready for ESG? And do you feel as though the boards of directors are taking an effective charge and effective responsibility of this? And how do you feel as though that's going to evolve over the next 2 years? And then we'll try and keep it brief on this, given the 5-minute though.
Yeah. I think, as with any mining company, it really depends on the leadership and the exposure of the folks inside the company and their ability to understand how they can turn an ESG approach or a sustainability approach or a focus on communities into a benefit for their business. Certainly, we see that in any partnerships that we do, particularly around exploration, is working very closely with our partners and helping them also think through this. But in general, we find that the smaller companies are typically closer to the ground. And if they're close to the ground, they've got a really close-up understanding of what those issues are. So many times it's not necessarily working with partners to point out to them what they already know. It's rather providing a framework so that they can take what they know and put it in a framework and say, oh, that's how we might be able to think about this. This is how we might be able to manage it. So that's how we approach it.
Okay. Annie, do you want to comment? You invested in many of them in the past?
Oh, absolutely. I think the most important thing is for the juniors.
Your volume, Annie, needs to go up a bit.
Juniors have always...
No, okay, I'm going to come back to you, Annie, because you don't seem to be able to be heard at the moment. Matt, do you want to just comment on this? And I know many of the private equity guys are in a fundraising round at the moment. So this is obviously an important element. Do you want to just comment on this with regards to the juniors and whether or not they're ready?
Look, so to Sharon's point, it's about creating the right framework. You have to understand that your partners that are, whether it's private equity or mining companies or your public shareholders, they want that framework. What you do find is juniors are very close to the ground. They understand what's going on in their communities, but in general, there are certain obligations of being a listed company or receiving money from the likes of us that you just that everybody has, that you need to understand more in a corporate environment. Those are things like human rights and things like corruption risk and indigenous people, UNDRIP, and being able to take those frameworks and understand that you have risk, don't have risk, and talk about it. It actually builds a better bridge to the communities that you're working with, your future partners, your future value growth. And it's a journey that people want to go on. They're curious. They may not have the tools themselves. So engagement around those issues helps drive people in that direction. And you'll find that almost anybody that's involved with junior companies is working in that direction pretty consistently. And it's just, what's the speed?
Okay. Justine, have you got any comments on that? The junior mining industry is important in Australia. So are they ready?
I think it's coming back to Matt's point, you've got to start somewhere. And Sharon's also right, it is about the leadership. So you can have a small organization, you can have a couple of people in there, and if they feel that they've got the basics to start with, and they are committed to the governance that our industry is holding itself up to, you can do it on, the smell of an oily rag. You really can. Mm-hmm. But it's the commitment's got to be there. And really, if you think about juniors and explorers, that's where the social license to operate starts. Oftentimes, explorers think, oh, we'll send the geologist out to knock on the farmer's door. That is the first interaction the farmer or whoever it is has with this organization. And then sometimes corporate affairs and community relation teams come in later on. And if you haven't had that commitment from the get-go and the engagement with your community at the outset, say, this is where we want to put the drill rig, this is how we'll manage the water table, this is what we'll do, then you're always clawing back from that. So if the leadership is there and the actual belief, which is what I was trying to say at the very beginning of this, if it's genuine, then you can get it right, and the reporting, etc., will absolutely follow. And organizations will be able to demonstrate this, and investors will see the value of that, whether you're at the small end of town or you're at the big end of town.
Okay, Annie, can we hear you now? No, I'm afraid we can't. So something's gone wrong with your mic, but so I think with 30 seconds to go, I'd really just like to thank everybody for their all the panelists for their help today, their wise and considered thought, and I wish you all well for the the input you've given here, and as part of this journey, as the start of this journey in many cases, with so much to evolve and to go forward. I think we can look bright here. I think this is an opportunity for the industry in so many different ways, from improving management capability, improving management accountability, and moving forward on the ground, in changing business culture. And I think this is a real new start for the industry that I think we can build on going forward, and hopefully bring in a lot of new pools of capital and changes to this industry, which will lead us in good stead going forward. So thank you all very much indeed for your input. I wish you all the best, and good night from London.
Thank you.